Ripple CEO Brad Garlinghouse on SEC lawsuit, crypto predictions XRP victory. The chief executive officer of Ripple, Brad Garlinghouse, provides answers to important questions regarding a variety of issues such as joining and scaling Ripple, fighting the ongoing case against the United States Securities and Exchange Commission, and making predictions about the cryptocurrency market and the future of blockchain technology. In addition, Garlinghouse explored the ways in which XRP can have an impact on the universe, the lessons that have been learned over the years in Silicon Valley, and the strategies of achieving success and discovering happiness that will last. During an interview with Chris Vasquez, the host of World Class Podcast, Brad Garlinghouse, the chief executive officer of Ripple Labs, revealed that the business took risks in order to fight the Securities and Exchange Commission for clarity and to prevent the bully, SEC, from assaulting the cryptocurrency investment market. He referred to the summary ruling that Judge Torres issued on July 13 as an important learning experience and one of the best days. Garlinghouse went on to say that the Securities and Exchange Commission has been attempting to reach a settlement in order to create a narrative that Ripple has been a bad actor. Brad Garlinghouse is certain that the Securities and Exchange Commission will be unsuccessful in the long run, notwithstanding the court's appeals and other arguments. The assertion made by Brad Garlinghouse in reaction to the fact that cryptocurrency has become a partisan issue in the United States is that this will ultimately be the issue that drives people in swing states away from the Democratic. He holds Senator Elizabeth Warren responsible for politicizing the issue, and Democrats fail to recognize that she is leading them off a cliff. Ripple's CEO maintained that the cryptocurrency sector has the potential to reach a market size of $5 trillion by the end of this year. What he does not advocate is jumping right into cryptocurrency trading. He recommended people to think about long-term investments, and trading is what he does not recommend. In a roundabout way, he alludes to the possibility of a rise in the price of XRP when the effects of the SEC litigation subside this year. As a result of the lawsuit, the price of XRP continues to be grossly undervalued, with the price currently trading in the vicinity of 0.50. He is of the opinion that the cryptocurrency business will experience some black swan incidents. Do I think there is going to be another black swan? It is without a doubt going to happen, he remarked. It is only that I am not really sure what it is. He made the prediction that the SEC would go after Tether, the company that issues USDT, since he believed that it was the only one that was going to be very intriguing to watch. In addition, he is of the opinion that the cryptocurrency market as a whole is not at risk from the implementation of quantum computing. The SEC has submitted its last reply brief and associated exhibits, marking the finale of the court war. Given that the Securities and Exchange Commission has recently submitted its final reply brief to determine the appropriate redactions, all parties will meet for the last time to discuss the submission, which is considered confidential. And it is anticipated that the current court battle with Ripple and the SEC will conclude early. With the submission of its closing answer and supporting papers, the SEC has completed its briefing in the Ripple against SEC case. The long-running legal dispute between Ripple and the U.S. Securities and Exchange Commission is expected to conclude. The last rebuttal brief in the Ripple versus SEC litigation was submitted according to staff. The details of the SEC paper that was made public are being withheld, secret for the time being, but a redacted version is scheduled to be released to the public on May 8, 2024. To do this, Ripple and the SEC will collaborate to scrub the document of any personally identifiable information. The Securities and Exchange Commission's recommendation of a penalty of about 2 billion sols against Ripple in its preliminary brief marked a major shift in the company's legal position. They said that the company broke federal securities regulations by selling its native token to institutions. Ripple said the punishment was too high and proposed a settlement of no more than $10 million. Lawyers expect the final report from the SEC to address Ripple's arguments against the agency's first recommendations for fixing the problem. In December 2020, the Securities and Exchange Commission filed a lawsuit against Ripple Labs and its management, claiming that they had violated federal securities laws and engaged in illegal activities within the cryptocurrency industry. The company was also accused of using an unregistered security to create the popular cryptocurrency influencer known as Metal. If the final verdict is appealed, the case could be prolonged until 2025. Wayman, who has been quite active on Twitter recently, has shed light on the Securities and Exchange Commission's lawsuit against Ripple. Specifically, he has focused on the SEC's recent filing regarding damages and disgorgement. Wayman argued on X that victim advocacy and the reasons why discourse should be the preferred remedy have not been adequately addressed by the SEC. The primary basis for the Securities and Exchange Commission's position is a single district court judgment called SX Enquires. This case determined that an artificially inflated stockholders' investment meets the pecuniary harm threshold. According to SEC institutional buyers who paid a lower discount for XRP than others suffered an inflated price, which clearly indicates monetary injury. The SEC thinks that a court injunction would be appropriate to prevent additional violations, given that Ripple intends to release more unregistered crypto assets. The SEC has raised concerns about Ripple's newly formed business structure and its possible links to future violations. According to the court document, Ripple has strong incentives to sell XRP regardless of whether its actions are legal or not. This is supported by the fact that it has increased its on-demand liquidity. In its submission, the Securities and Exchange Commission expressed its opinion that Ripple's assertion that investors have not suffered any financial harm is inconsistent, citing the company's refusal to accept wrongdoing and its apparent attempt to shift blame. The SEC sued Ripple over those sales, and the company continues to deny any wrongdoing. The CC has asked for injunctive action. The SEC suggests that even if they were to make a profit from buying and selling XRP, they would still have lost money due to the artificially inflated price. This is because there wasn't enough transparency. The court is likely to grant injunctive relief and discouragement. He acknowledged that the court could follow the lead and find that Ripple's institutional investors have suffered financial harm, but he emphasized that this is still highly unlikely. By doing so, he exposed the inconsistencies of the CC, which relies on a non-binding case to support its claims, while the SEC defends its discouragement without offering any real evidence. The court filing shows that the SEC's goal is to prevent future violations by employing injunctive relief and the enforcement of fines and penalties that punish and discourage future violations, even though Medellin is critical of the method. Furthermore, it highlights the SEC's determination to hold Ripple responsible for its actions and the fact that it did not adhere to proper disclosure standards in its business dealings. As a response to the SEC stance in the Apple brief, Ripple's chief legal officer, Stuart Alero, said the credibility of the control is continuing to deteriorate. He also noted that the CC's criticism of the CC's enforcement of regulations regarding cryptocurrencies may be confusing to foreign financial regulators who have put in place solid regulatory frameworks. Please note that the information provided on this page is not meant to be trading advice. We do not take responsibility for any investments made based on this information. Before making any investment decisions, we strongly advise conducting self-sufficient research and consulting with a knowledgeable professional.